everyone, Justin Havre here. Let's break down Calgary's housing market for February of 2025. We saw some major shifts. Inventory surged, sales slowed, and prices continued to rise, but at a more measured pace. Whether you're buying, selling, or just keeping an eye on the market, these trends matter. How will this impact you as a buyer, seller, or investor? Let's dive into it. We saw 76% increase in year-over-year inventory, bringing our inventory to 4,145 units. The biggest increase, properties under 500,000, driven by more properties available in the apartment and townhouse segments. Our months of supply is holding steady at 2.4 months, but that's more than double of what we saw last year. Apartments are the most well supplied at 3.1 months. It's important to note that these are still very low inventory numbers in comparison to normal markets. If you're looking at a balanced market, we're looking at 2.5 to 6 months-ish of inventory. So we're just getting into that balanced market territory. So don't be too alarmed by this. I think more supply is a healthier marketplace for everyone. Now let's talk about sales and listings. With 1,721 properties sell in February, strong compared to historical trends, but it's still down by 19% from last year. Now, did that deep freeze have an impact on the market? 100%. We saw less people go out and about because of the cold weather, which I think had a factor in the housing sales for the month of February. New listings hit 2,830, keeping pace with a typical February. So normalizing is not a bad thing. Cold weather, it was cold. We're now happy that we are obviously in spring. Now, let's talk about the balance in the marketplace. The sales to new listings ratio is at 61%, higher than historical norms, but cooling compared to the last 3 years. So what does this mean? More inventory means more option for buyers. This also means great news for sellers because some people that may have been considering selling their home to make a move in previous years didn't put their house on the market because didn't have a place to go to. Now they have options in the marketplace as well. There are still strong demand in our market. And if you're thinking about buying or selling, now might be the time to take advantage of the current market conditions. Detached home sales in February totaled 765 units, down nearly 20% from last year. But here's a shift. New listings increased by about 6%, pushing inventory up a massive 61% over last year to 1,698 homes. Despite this, prices continue their upward trend, climbing 5% to a benchmark price of $760,500. District-wise, the biggest increase were in the city center and south, where prices rose by nearly 8%. Sellers may need to adjust their expectations as more supply enters the market, meaning more competition for sellers, while buyers have more room to negotiate and more selections. The semi-detached market also saw a slowdown in February, with sales dropping 14% to 165 units. However, new listings grew by 7%, pushing inventory up 46% to 326 units year over year. Prices still managed a solid 7% increase, reaching $683,500. Meanwhile, row homes experienced a 9% drop in sales to 318 units, but inventory more than doubled, jumping by 113% to 655 units. With more supply available, price growth slowed to 3%, landing a benchmark price at $446,800. Buyers in these segments now have greater flexibility and more options to choose from. Now let's talk about the biggest shakeup, apartments. A continuing trend from January, sales in this sector took the steepest hit, dropping 26% to 473 units. At the same time, new listings reached record levels for February at 852 units, pushing the inventory up by a staggering 90% to 1,466 units. This shift resulted in 3.1 months of inventory, significantly higher than other property types. Despite the flood of new listings, demand held steady enough to push prices up by 4% to 334,200 year over year. The West District led the way in price growth by over 8%. This increase in supply gives buyers more leverage, more options, and making this a prime time to enter the apartment segment. Housing trends are directly tied to employment and economic conditions. As of January 2025, Calgary's unemployment rate jumped to 7.7%, significantly higher than the 5.9% recorded a year ago. The city added jobs in healthcare, trade, and construction, but losses in accommodation, food services, and transportation put pressure on overall employment stability. With over 52,700 people on employment insurance, financial constraints could impact buyer demand in the months ahead. However, wage growth in key industries may result in some support for affordability. Now let's talk about the wild card that none of us anticipated would happen here this year, the US tariffs. With new tariffs on Canadian imports, our economy could take a hit, and that could ripple into real estate. A 10% tax on Canadian energy exports might slow down the oil sector, one of Calgary's biggest job creators. If that happens, we could see more job losses, lower consumer confidence, which means fewer people making big purchases like homes. On top of that, if tariffs push prices up for building materials, new home construction could slow down, and that could tighten supply and keep prices high. The bottom line, keep an eye on economic trends and data because they will play a big role in where the market heads next. It's also important to know that we live in a world where news headlines come out each and every day, and I think the best thing to kind of do here as well is pause and allow things to play out as things can change almost on an hourly basis. Could the market change month over month? Absolutely. The thing is, nobody has a crystal ball to predict what it's going to look like 6 months from now, as well as what's going on between the US and Canada. And I anticipate that they will sort things out. And once they sort it out, then things will normalize some more in the stock markets and with the consumer confidence, allowing people to kind of exhale and breathe, and then business as normal. Interest rates play a crucial role in the housing market, and as of March 4th, 2025, the Bank of Canada policy rate stands at 3%. This rate influences the borrowing costs across the country, as well as the 5-year bond rates, which is tied directly to the fixed rate mortgage product. Currently, the lowest available mortgage rates in Canada are 3-year fixed insured mortgage at 3.87%, 5-year fixed insured mortgage at 3.89%, and a 5-year variable insured mortgage at 4.15%. These rates are relatively low, particularly due to legislative framework that supports favorable lending conditions. For buyers, the current market conditions offer some great opportunities. With inventory rising across all housing types, there are more selections and less competition than previous years. The increase in months of supply, especially in the apartment and row segments, means buyers can take their time, negotiate better deals, possibly find properties below asking price. Additionally, with potential interest rate adjustments on the horizon and the lower bond rates, which again can affect the 5-year fixed mortgage rates, securing a favorable mortgage rate could be more beneficial. If you're in the market to buy, this might be the right time to act. And with more inventory coming onto the market, it simply just means that our market is normalizing. The real estate market hasn't been normal for the last several years with incredibly low supply. If we're sitting in that 3 to 6 months of supply, it means we're in more balanced market conditions. Once we get over that 6-month supply of inventory, that's when we're entering into the buyer territory where buyers can a lot of negotiating power. Don't be too alarmed by the higher inventory. It is actually, again, more favorable market conditions for everyone. For sellers, while the market is shifting, there are still advantages. Prices remain higher than last year, and demand for competitive price homes desirable locations is still strong. Sellers who position their properties competitively, invest in smart staging, and the right marketing strategies can attract serious buyers. The detached home segment, in particular, continues to see steady price growth. However, with inventory levels increasing, strategic pricing and the right marketing strategies will be crucial to securing a sale in a timely manner. So what does this mean moving forward? With inventory rising across all sectors, we may see price growth continue to moderately grow over the next few months. Buyers have more choice, making conditions less competitive than last year. For sellers, pricing strategy and having the right marketing plan is more important than ever. Additionally, with unemployment climbing and potentially interest rate cuts on the horizon, affordability may become a bigger concern, potentially influencing demand in the mid to lower price ranges. Calgary's real estate market is evolving. Staying informed is key. And if you're looking to buy or sell, we would love to help. The Justin Havre real estate team has helped over 11,000 families find or sell their home. We take pride in our tested and proven marketing strategies that deliver results. Most importantly, personalized one-on-one service guiding you through the buying and selling process, getting you to your next home. Reach out to us today at 403-217-0003 or go to justinhavre.com and start packing. And if this update is helpful, hit that like button, share it with a friend, subscribe for more insights. Until next time, Calgary, enjoy the sunshine and stay positive.